Between 2014 and 2018, Jeff Bezos' wealth increased by $99 billion as his Amazon stock went from $30 billion to $129 billion. In those same 4 years, Bezos paid $973 million in federal income taxes. $973 million on $99 billion in wealth growth is a tax rate of 0.98%, less than 1%. If you make $60,000 a year, your effective federal tax rate is around 10 to 12%. You paid 10 times the rate that Jeff Bezos paid on your salary, while Bezos made $99 billion. In 2007 and 2011, Jeff Bezos paid zero federal income taxes despite being worth over $18 billion in 2011. Elon Musk in 2018 paid zero federal income taxes when he was worth $23 billion. Michael Bloomberg between 2014 and 2018 paid an effective rate of 1.3%. Carl Icahn in 2016 and 2017 paid zero. George Soros between 2016 and 2018 paid zero. This isn't tax evasion or illegal. This is a strategy so effective and protected by the tax code that the wealthiest people in America use it to avoid paying billions in taxes every year while staying completely within the law. It's called buy, borrow, die. It's the reason why billionaires pay lower tax rates than their secretaries, why wealth inequality is accelerating, and why the federal government is running trillion-dollar deficits while the richest Americans pay almost nothing. The buy, borrow, die strategy has 3 steps that together create a machine generating infinite wealth while paying almost zero taxes. Buy assets that appreciate in value like stocks, real estate, companies, or art, anything that grows over time. Jeff Bezos owns 990 million shares of Amazon and Elon Musk owns 401 million shares of Tesla. These shares increase in value every year, making their net worth go up. Unrealized gains are not taxed. If you buy Amazon stock at $100 and it goes to $200, you made $100 in profit. But the IRS doesn't tax that profit until you sell the stock. As long as you hold it, the gain is unrealized and you owe zero taxes. This is true for everyone who owns stocks in a brokerage account. You eventually sell because you need the money to live, to buy a house, pay for retirement, or pay for your kids' college. When you sell, you pay capital gains taxes of 15% to 20% on the profit. Billionaires never sell and hold the assets forever. Because they never sell, they never realize the gains, and they never pay taxes. Instead of selling assets and paying taxes, billionaires borrow money using their assets as collateral. Jeff Bezos owns $100 billion in Amazon stock and goes to Goldman Sachs or Morgan Stanley asking to borrow $500 million. The bank says they'll give him a loan at 2% interest, using his Amazon stock as collateral. Bezos takes the $500 million in cash and spends it on whatever he wants: houses, jets, yachts, or funding other investments. Borrowed money is not taxable income. If you earn $500 million in salary, you pay 37% federal income tax plus state taxes, totaling $185 million in federal taxes alone. If you borrow $500 million using your stock as collateral, you pay zero income taxes because it's a loan, not income. The interest on the loan at 2% is far less than the growth of the assets. If Amazon stock grows 15% per year and the loan costs 2% per year, Bezos is making 13% net. He's getting richer while living off borrowed money tax-free. This is called securities-backed lending, which every major bank offers to ultra-high net worth clients. You need at least $10 million to $50 million in assets to access these loans. Bezos borrows $500 million at 2% and lives off that for a few years. When he needs more money, he borrows another $500 million with still no taxes. He doesn't pay off the original loan but refinances it or lets it roll over. The banks don't care if he pays it back because the collateral, his Amazon stock, keeps going up in value. The loan is secured, the bank is happy, Bezos is happy. The only loser is the IRS, which collects nothing. When the billionaire dies, something magic happens in the tax code called the step-up in basis. Jeff Bezos bought Amazon stock in 1997 for pennies with a cost basis of about $1 per share. Today, Amazon is $180 per share. So if Bezos sold, he'd pay capital gains tax on the $179 per share profit. Bezos never sells but borrows against the stock his whole life. Then he dies. When he dies, his heirs inherit the stock, and the IRS rule says that inherited assets get a step-up in basis to the current market value. The stock Bezos bought at $1 per share, now worth $180 per share, gets stepped up to $180 per share for his heirs. The $179 in gains are gone, erased, as the IRS pretends the gains never happened. Bezos' heirs now own the stock with a cost basis of $180. If they sell at $180, they owe zero capital gains taxes because there's no gain. The entire $179 per share appreciation that happened during Bezos' lifetime is never taxed. His heirs sell a small portion of the stock to pay off the loans Bezos took out. Because of the step-up in basis, they sell at zero capital gains, or they just take out new loans themselves and continue the cycle. Bezos lived a billionaire's lifestyle for decades, paid almost zero income taxes, and his heirs inherit the wealth tax-free. Buy, borrow, die. Buy appreciating assets, borrow against them tax-free, die, and pass them to heirs with the gains erased. It's the most powerful tax avoidance strategy ever created, and it's 100% legal. The step-up in basis isn't an accident or a loophole that slipped through, but was designed deliberately to benefit the wealthy and defended by armies of lobbyists. For over 100 years. The step-up in basis rule was created in 1921, just 8 years after the federal income tax was created. The stated reason was to avoid taxing the same income twice. The idea was that if someone bought stock and held it for 40 years, taxing the heirs on decades of gains would be unfair because it was old income. That logic is absurd because the gains were never taxed. If Bezos never paid taxes on the $179 per share gain during his lifetime, erasing it at death isn't avoiding double taxation but avoiding all taxation. The real reason the step-up in basis exists is because wealthy families lobbied for it. In the 1920s, the Rockefellers, the Mellons, the Carnegies, all the Gilded Age fortunes needed a way to pass wealth to heirs without the government taking half. Estate taxes existed but could be managed. The real threat was capital gains taxes on unrealized appreciation. If the government taxed inherited assets based on the original purchase price, the heirs would owe enormous taxes. The wealthy lobbied Congress to create the step-up in basis. Congress filled with wealthy landowners and industrialists, happily obliged. Since 1921, the step-up in basis has been attacked multiple times. In 1976, Congress actually repealed it and replaced it with carryover basis, meaning heirs would inherit the original cost basis and pay capital gains taxes when they sold. The repeal lasted less than 4 years. By 1980, after intense lobbying from wealthy families, real estate interests, and farm lobbies, Congress reinstated the step-up in basis. It's been protected ever since. Every few years, someone proposes eliminating the step-up in basis. Elizabeth Warren proposed it in 2021. Biden proposed taxing unrealized gains at death in 2022. Every time, the proposal dies in committee. The lobbying is overwhelming. The American Bankers Association lobbies to protect securities-backed lending because banks make billions in loan fees. In 2023, U.S. banks held over $600 billion in securities-backed loans to wealthy clients. At 2% interest, that's $12 billion in annual revenue. The investment company Institute lobbies to protect the step-up in basis because it keeps wealth in the stock market. If billionaires had to sell stock to pay taxes, they'd pull money out of the market. The Real Estate Roundtable lobbies because real estate investors use the same strategy of buying property, borrowing against it, dying, and passing it to heirs with stepped-up value. The National Federation of Independent Business lobbies because small business owners claim they need the step-up to pass businesses to their kids. In 2021 alone, these groups spent over $200 million lobbying Congress on tax issues. That's $200 million to protect a system that costs the federal government $40 billion to $60 billion annually in lost tax revenue. It works as the step-up in basis is politically untouchable. According to a 2021 study by University of California, Berkeley economists Emmanuel Saez and Gabriel Zucman, the 400 wealthiest Americans, own $4.5 trillion in wealth. Most of that wealth is unrealized capital gains in stocks, real estate, and private companies. If that $4.5 trillion were realized and taxed at the 20% capital gains rate, it would generate $900 billion in tax revenue. Because it's never sold, the government collects almost nothing. ProPublica analyzed IRS data for the 25 richest Americans between 2014 and 2018. Their combined wealth increased by $401 billion. They paid $13.6 billion in federal income taxes. That's an effective tax rate of 3.4%. The middle class can't borrow against assets tax-free. If you own a $500,000 house and want to access the equity, you take out a home equity loan or a HELOC with interest, usually at 7% to 9%. You still have to make payments from your after-tax income. If you own $500,000 in stocks in your 401k and want to access it before retirement, you pay a 10% early withdrawal penalty plus income taxes with an effective cost of 40 to 50%. If you own $500 million in stocks, you borrow against it at 2% and pay zero taxes. The system is designed so that the more wealth you have, the less taxes you pay. It's regressive by design. In 2021, the IRS estimated that $600 billion in taxes goes uncollected every year due to tax avoidance strategies, loopholes, and offshore sheltering. Of that $600 billion, roughly $100 to $150 billion is from the buy, borrow, die strategy and step up in basis. That's $150 billion per year that could fund infrastructure, healthcare, and education. Instead, it's staying in the hands of 400 families. Between 2014 and 2018, Oracle founder Larry Ellison's wealth grew by $13.2 billion. He paid $1.4 billion in federal income taxes over that period. That's an effective tax rate of 10.6%, about the same as a $70,000 household. Ellison owns 1.1 billion shares of Oracle and never sells. According to Oracle's SEC filings, Ellison has taken out over $10 billion in loans using his Oracle stock as collateral. He lives off those loans. He bought a $300 million yacht and the entire Hawaiian island of Lanai for $300 million, all purchased with borrowed money with zero taxes paid on any of it. Warren Buffett is famously vocal about how the rich don't pay enough taxes and has called for higher taxes on the wealthy. He said his secretary pays a higher tax rate than he does. He's right because Buffett himself uses buy, borrow, die. Buffett owns 38% of Berkshire Hathaway, worth over $120 billion, which he's owned for decades and almost never sells. According to ProPublica, Buffett's wealth grew by $24.3 billion between 2014 and 2018. He paid $23.7 million in federal income taxes. That's a tax rate of 0.1%, 0.1%. Buffett doesn't take a salary, but takes $100,000 per year, which is taxable. The vast majority of his wealth is in Berkshire Hathaway stock, which he never sells. SEC filings show Buffett has a personal line of credit for liquidity purposes and borrows against his Berkshire shares to fund his lifestyle. When Buffett dies, his wealth will pass to his foundation and his heirs with a stepped-up basis, and the $120 billion in gains will never be taxed. Elon Musk paid zero federal income taxes in 2018 when he was worth $23 billion. Musk takes no salary from Tesla. He has a compensation package based entirely on stock options that are not taxed until exercised. Musk doesn't exercise them unless he has to. According to Tesla's SEC filings, Musk has borrowed over $20 billion using his Tesla shares as collateral. He uses those loans to buy Twitter, fund SpaceX, build rockets, and more. In 2021, Musk paid $11 billion in federal taxes, which the media celebrated as Musk paying his fair share. The only reason he paid taxes was because he was forced to exercise stock options that were expiring. If those options hadn't expired, he would have paid zero again. Even that $11 billion in 2021 was on wealth growth of over $100 billion that year. So his effective rate was still about 11%. Michael Bloomberg is worth $96 billion. Between 2014 and 2018, his wealth grew by $22.5 billion. He paid $292 million in federal income taxes with an effective rate of 1.3%. Bloomberg owns 88% of Bloomberg LP, the financial data company. The company is private, so he doesn't have to disclose much, but we know he takes minimal salary. He borrows against his ownership stake. When Bloomberg ran for president in 2020, he promised to raise taxes on the wealthy, but he himself pays almost nothing because of the system he benefits from. The pattern is consistent. Buy assets, hold forever, borrow to live, pay minimal taxes, die and pass wealth tax-free to heirs. The buy, borrow, die strategy only works if you have tens of millions or hundreds of millions in assets. If you have $100,000 in stocks, no bank is giving you a loan to live on. You might get a margin loan of $50,000, but the interest rate will be 8% to 10%. If your stocks drop, you'll get a margin call and have to pay it back immediately. If you have $100 million in stocks, banks compete to lend you money at 2% because you re a valuable client with massive collateral and you re not a risk. If you bought stocks worth $200,000 and they grew to $400,000, the step up in basis saves your heirs maybe $30,000 in taxes, which is nice but not life-changing. If you bought Amazon stock worth $10 million in 1997 and it's just now worth $10 billion, the step up in basis saves your heirs $2 billion in taxes, which is dynasty-altering wealth preservation. The average person needs salary or business income to pay rent, buy food, and pay bills. You can't live off loans because you don't have assets to borrow against. Billionaires don't need income and borrow $10 million, live off it for 2 years, then borrow another $10 million. The debt doesn't matter because their assets are growing faster than the interest. The system is designed so that only the ultra-wealthy can access the most powerful tax avoidance strategies. The more money you have, the less taxes you pay in this inverted system. The result is a massive transfer of the tax burden from the wealthy to the middle class. In 1980, the top 1% of Americans paid 19% of all federal income taxes, and the bottom 90% paid 50%. By 2020, the top 1% paid 42% of federal income taxes, but the bottom 90% paid 37%. That sounds like the rich are paying more, but income taxes are only part of the story. Payroll taxes, which fund Social Security and Medicare, are capped at $160,200 in income as of 2023. If you make $50,000, you pay 7.65% in payroll taxes on all of it. If you make $500 million in capital gains, you pay 0 payroll taxes because capital gains aren't subject to payroll tax. The middle class pays income taxes plus payroll taxes. The wealthy pay minimal income taxes and 0 payroll taxes on most of their gains. Add sales taxes, property taxes, and state taxes, which are all regressive, and the total tax burden on the middle class is higher than the wealthy as a percentage of income. In 2021, the Institute on Taxation and Economic Policy calculated that the bottom 20% of Americans pay an effective total tax rate, federal, state, local, of 20.2%. The top 1% pays an effective rate of 23.8%. The richest Americans pay only 3.6 percentage points more than the poorest, despite earning hundreds of times more. For the top 0.01%, the billionaire class, the rate drops again because of strategies like buy, borrow, die. Every year, about $500 billion in wealth is transferred at death in the United States. About half of that $250 billion is transferred from estates worth over $10 million. Under current law, estates over $12.92 million, as of 2023, are subject to estate taxes at 40%. That sounds like a lot, but there are massive loopholes. If you die with $100 million in stocks that you bought for $10 million, your heirs inherit $100 million with 0 capital gains taxes owed because the $90 million gain is erased. Billionaires place assets in irrevocable trusts, family foundations, and donor-advised funds that avoid estate taxes entirely. If you own a private company, you can claim the shares are worth less than market value for estate tax purposes, which cuts the taxable estate by 20 to 40%. The result is that very few billionaires pay the 40% estate tax, as most pay far less and some pay nothing. When David Koch died in 2019, he was worth $50 billion, and his estate taxes are unknown because it's private, but estimates suggest he paid less than 10% due to trusts and valuation strategies. That's $40 billion passing to heirs with minimal taxes. When Sheldon Adelson died in 2021, he was worth $35 billion. He had structured his estate using GRATS, grant-to-retained annuity trusts, and other vehicles. His estate tax bill was estimated at under $5 billion, an effective rate of 14%, not 40%. Every billionaire uses estate planning to cut the tax bill, and the step-up in basis is the foundation of that planning. The Congressional Budget Office estimates that the step-up in basis costs the federal government $40 to $60 billion per year in lost revenue. Over 10 years, that's $400, $600 billion. That's $600 billion that could fund infrastructure, healthcare, education, and debt reduction. Instead, it's protecting dynastic wealth. There's no political will to change it. In 2021, Bernie Sanders proposed the 99.5% Act, which would have eliminated the step-up in basis for estates over $1 million and taxed unrealized gains at death. The bill went nowhere. In 2022, Joe Biden proposed taxing unrealized capital gains above $100 million. The proposal was dead within weeks. The lobbying is too strong, as the financial industry, the real estate industry, and the business lobby all unite to kill any proposal that threatens the step-up in basis. The public doesn't understand the issue, as if you asked 100 Americans what the step-up in basis is, maybe 5 could explain it. Most people don't know it exists. The system persists. Billionaires pay almost nothing. The middle class pays for everything. And the deficit explodes because the government can't collect revenue from the people who have it. The federal deficit in 2024 is $1.7 trillion, which is how much more the government spends than it collects in taxes. If the step-up in basis were eliminated and unrealized gains at death were taxed, the government would collect $50 to $80 billion per year. If securities-backed loans were treated as taxable events when the collateral exceeds a certain threshold, another $50 $100 billion would be collected. That's $130 to $180 billion per year. Not enough to close the deficit, but enough to fund massive programs like universal pre-K, infrastructure, veterans benefits, and debt reduction. Instead, that money stays with 400 families and the middle class pays higher taxes to cover the shortfall. The system is working as designed, it's not broken, but functioning exactly as the people who lobbied for it intended. Buy, borrow, die isn't a hack or a clever trick discovered by smart accountants. It's a system built into the tax code by lobbyists and defended by politicians who receive millions in campaign contributions from the people who benefit. Every billionaire uses some version of this strategy. Every major bank facilitates it. Every estate planning attorney structures wealth around it. The IRS is powerless to stop it because it's legal. In 2021, the IRS received leaked tax data showing that the 25 richest Americans paid an average effective tax rate of 3.4%. The leak caused a scandal and Congress held hearings where politicians expressed outrage. Then nothing happened. No laws changed, no loopholes closed, and the system continues. The people with the power to change the system are the same people benefiting from it. This isn't about hating the rich or punishing success. This is about a tax system that's fundamentally broken. If you start a company, take risks, create jobs, and become wealthy, you should be rewarded. No one disputes that. The system should be fair. If you make $50,000 and pay 12% in taxes, someone who makes $50 billion shouldn't pay 1%. That's not capitalism, that's feudalism. The buy, borrow, die strategy exists because the people who benefit from it have the power to protect it. They hire lobbyists, fund campaigns, and write op-eds in the Wall Street Journal explaining why taxing unrealized gains would destroy the economy. The real destruction is happening now. The deficit is exploding. Infrastructure is crumbling, Social Security is going insolvent, and the people with the wealth to fix it are paying almost nothing. You're not going to use buy, borrow, die because you don't have enough assets. The banks won't lend to you at 2%. The step-up in basis won't save your heirs from paying taxes because your gains aren't big enough to matter. This strategy is reserved for the 0.01%, and they're using it to avoid paying billions in taxes while you pay thousands. When politicians talk about raising taxes, they're talking about raising your taxes, income tax rates, payroll taxes, capital gains on small investors because that's where the government can still collect revenue. The billionaires are untouchable, the system protects them, and unless something changes, it always will. Buy, borrow, die is the strategy that lets billionaires pay zero taxes, live like kings, and pass dynastic wealth to their heirs tax-free. All while you pay 10%, 20%, 30% of your income to fund a government that can collect from the people who actually have the money. Understanding the system is the first step to seeing how rigged it really is.